all, Benny Reese West. We're going to take a look at uranium this week. Pretty bad week again for the entire stock market. So we're fighting downtrends. Let's see what we can see. So we'll just start off here looking at UR8. This is the area we highlighted last week, and the market's just found that area and bounced. So in terms of an Elliott perspective, I'm probably sitting like this. I think I mentioned this last week. I think this is, you can only call this a 3. I mean, yeah, I don't think you can call this a 5. That's a 3. So I think we've got a WXY. But it's all about this area and whether or not we can hold there. But you know, we're captive to the overall market. So we did push through our measured move target here, and look, we can't rule out a push lower. It's definitely possible. But quite interestingly, we've made pretty much a one-to-one move. So this leg down to here off this top has basically gone the same distance. So you got an equidistant leg move there. So that's kind of a marker. It certainly creates a bit of interest in the market to see if we can push away from here. So sort of, you know, expect the best here. We've got a few markers that suggest we could get out of here, but prepare for the worst. The worst for me would be a push down here below $26 and possibly into the high 2400. Certainly wouldn't want to see it come any further than this. That would be very, very problematic. But you can't rule that out, because in the current market climate, you know, stocks are under pressure this week. So I think the rate cuts are coming. So I suspect it finds its feet. I just think it's going to get some tailwinds pretty shortly from overall market dynamics. Will start to respond to lower rates incoming. So we don't have the lower rates. Of course, we've got the Fed next week. But if they start signalling dovish, as I suspect they will, but we don't know that, that's going to help for sure. So you might just have to wear this, ride this out until the Fed come to the rescue to a degree. But you know, we can't rule out that the Fed disappoints the market, and if we do, we have to start thinking about if it's going to get down here, okay? Because there's no dancing around the fact that this is a downtrend, and we've got a lot of work to do before we break it and can resume the uptrend. Okay, so this is just short term. This is just trending down. Now we did get a free bar here outside the Keltners. Okay, so that would suggest to me that this run has now, you know, sort of blown itself out. It's kind of done its thing. But it goes without saying that we just need to break this. We need a trend change, okay, and we don't have one. And we also need this RSI to get back above 60. So there's a fair bit of water to go under the bridge, I think, before you can put a flag in the ground and call this the bottom. It remains a candidate, but there's some work to do here. CCJ filled the gap. Okay, so that's kind of something we were looking at last week. I remember what I said, 80% of all bull gaps since 2020 in CCJ have been filled, and this is another one that's been filled in. So there is a propensity for this market to fill gaps. And this is shot a little bit further. I was hoping we might find our feed here at the 100, but this one's gone a little bit further. So we've dribbled through. We've just had a doji candle this week. So, you know, the RSI has been on a downtrend, but we're still here. We really just need to find our feet. Okay, and we don't have enough evidence to support the theory that the bottom's in terms of price just yet. But I'll leave this line here that represents mid-August, where that seasonality clock sort of kicks in, which is what we were looking at previously. But look, honestly, guys, I think the best you can expect, or the best you can hope for right now, is just for the market to stabilize and stop falling. You know, hopefully that is the low. Hopefully this is more, maybe a bit something more like that. But I think that's just what you've got to set your expectations to at the moment. You know, sans a massive market rally, which we could get, okay, but you know, it might be difficult to lure people back into this, okay, but we still need to trend away, and we still need to get outside this trend channel, I'd suggest. And the top of this trend channel isn't set in stone, because we've only got one pivot we're coming off here, and even the bottom of this, you know, we might even have to redraw this a little bit, okay. There's no correct way to draw or incorrect way to draw a trend channel. Okay? It's just a representation of the shape of price. So my man, the Red Devil's been been telling you, we're just on a daily here, but this is the weekly 50 EMA, and we're just tagging it right now in CCJ. And as he pointed out here on the weekly, that the market's ridden this line pretty well for quite some time. So, you know, we'll keep our eye on this. We don't want to see the market start wilting below this, even though we've had some undercuts. But, you know, I think the point here is that the market was in a correction through here, okay? Now, we are in a corrective phase now, of course. But since we sort of started this whole time where we had one little undercut here, but this whole trend, and this is a long time. This is November 2020 all the way to November 2020. That was a whole year's rally where we just held that, okay? And even from here, March 2023, and we've held it all the way, and we've just tickled below it here in July 2024. So, like I said, we're in a corrective phase. The market's kind of held this 50 EMA, but let's just keep an eye on it, because that will be a bit of a fulcrum that we can sort of pivot around in terms of our decision making. It's coming over here to URNM. Now, I sort of said this before, that anyone listens, but 2023 was the year of the was pretty much the year of the trend. 2024 is the year of the correction, and so it's proven. So we are still correcting here, okay? But at the end of the day, I know this looks bad, but really we're just still, what are we doing? We're just bouncing around, and maybe you could tighten this up, okay? We're just really still bouncing around inside a range, okay? Yes, we've had a little push down to peak below the range, but that's why I said maybe you could sort of wind it out to, I probably wouldn't do that, but you get the point, right? And we've just sort of expanded a little bit here. I mean, you could make the argument like that and say, well, we push through the top here and fail. We push through the bottom here. Are we going to push back up? I suspect we do. I suspect we come back up into this. But what we're not ready for, regardless of what your favourite pump groups say, is we're not ready for the rocket. It's just not there yet. We don't have the ingredients. They could be coming. They could be coming soon. But until then, you're going to have to wait it out. There's just really no other way around it. Now, in terms of distance travel, this is a bit interesting this week because we came down here, we tapped the 50, the overall move, okay, from the bottom all the way to this top, forgetting about the Elliott structure, but all the way to this top, we've come back 50% of the move. We've held it so far and we've bounced, so that's a positive. In terms of the overall distance we've travelled, we've gone a little bit far here, a little bit through the 100, but so be it. It's not set in stone. We just look for these things. If they do respond to geometry, if they don't, we just move on. So this leg, let's just get this marker here. So this leg as opposed to this leg, okay, so that's gone a little bit further than 100, but it has come down here, hit the 50 and just sort of hit this supportive structure down here. So far we've held, so far. Now we didn't get a measured move structure through here, so that I'm a little bit wary of this. We haven't found our 100, and nothing says we have to, of course, but it's just the sort of markers I'd look for. So I'm prepared for that to come down there, and when you line that up, that 100 lines up right on that, just almost right on that pivot. So that would certainly be something I'd be on the lookout for. If the market has another bad little run, in terms of, I'm just talking about the general stock market here, because this is all just captive to the general stock market. That would be another marker I'd be looking for, but hopefully we've found the bottom here. We can't say we have. The RSI is very low, but we don't have any signs of divergence yet, and once again, we really just need to get back above 60 here in the RSI, so we're a long way away from doing that. Once again, coming in here though, we did free bar outside these Keltners, but it's the same thing. I mean, and it's the same thing with all of them, right? We're just in a downtrend, and this downtrend's a little bit better formed because we can come off this top here. That connects quite nicely, and the parallels connect quite nicely here. So this is the channel I'd be looking at. Okay, I just really want to see the market start trending out through this channel before I could come back here and say, okay, that looks like a bottom's in. Okay, and let's just poke through there, and then we could come back here and say, okay, well, this probably isn't 1, 2, 3. I wouldn't call this a 5-wave. I think I'd call this a 3-wave. So I'd have to redo this to WXY. But I'm not really worrying about the Elliott just at the moment. I'm just worrying about looking for price to trend, and it's not. Okay, it's downtrending. That's it. There's nothing else to say. Just finishing up here on the physical trust. This one looks a little bit better to me. There's a couple of signs coming out of this one. I just like the look of it a little bit more. So here we've got the equidistant move. So what I'm saying is that this leg was equal to this leg. Okay, so an AB equals CD sort of pattern, if you will. Nice 1-to-1. So that sort of ticks that box. Plus we've just come in here and just tickled the 50 of the whole big move, and I'm coming off because this is corrective. So I'm coming off here where I believe the rally started, because I would probably go 1, 2, a little bit hard to put it together, maybe 3, 4, 5. Maybe we could come off the bottom here, so maybe it's got a little bit further down to go. But either way you dice it, it is coming into sort of a nice retracement area that couples into, this sort of structural element here. But what looks a little bit more interesting is I'm just looking at this now. This kind of divergence is more the sort of thing I'd be on the lookout for. It's not a guarantee that the market's going to stop, but this is just the kind of thing you want to see as the market begins to find its feet. So the divergence between this bottom and this bottom has come in. Okay, so but once again with the RSI, we still need to get back above that 60 level to really start to put a flag in the ground that this could be potentially a low. Just examining this a bit closer, this looks kind of a bit more like it could be 1, 2, 3 with a big ugly 4 and then a 5. So that looks kind of more potentially a 5-wave pattern, even though it's not very nice. That almost pays better as a 5 than a 3. So I don't know. I mean, this looks more potential for a bottom. There's just a few more things lining up here, but of course, it looks like we've got a pretty clear area there what we've got to get through. So we're still looking for that area there, just sort of in those low $28, and we've still got to push through here, get outside this trend channel. It's pretty simple, really. But really, than sort of stress over the uranium charts, this is really all you've got to look at, because this is what's really going on. It's just the stock market itself. It's just we've come to a good area here. Okay, I don't mind this as a sort of a potential bottom for the S&P. We're on the mini S&P here to remind you. It's just here on a 4-hour. We've got it doesn't have to be exact, but we've got a pretty nice sort of one to it. It's just tickled through a 1-to-1 move. Okay, so there's signs coming in here that the general market is trying to put a bottom in. Okay, and it will be aided by the Fed, because of course if the Fed turns around and starts making noises about rate cuts, then back up we go, and that rising tide will float all boats, including uranium. Same thing here for the Nasdaq. Okay, we've just come down here, just look at the tops through here and these bits of structure that we've just come back and run into. Okay, because it's classic trading sites. All right, and it's hard to get the structure in here, but we had a sell-off and a bounce here. But if you take the 1-to-1 move, look, the problem with the bounces through here is there wasn't great retracement. Okay, so that one got a little bit further, but if you're talking about this one, this was pretty pitiful as a bounce before we had the next trend leg down. So it's difficult to sort of make drawings and comparisons off. I mean, you can sort of come off here and then try for the 1-to-1, which we're a bit short of, but the other thing you could do is possibly come off this peak, in which case we just push straight through. But this is just what you'd be looking for, because I can tell you right now, uranium and tech don't have anything to do with each other. There's no point in comparing them. The ratio charts of the Nasdaq, they're irrelevant. Okay, you may as well compare uranium to soybeans. Like they're not related. But there's no doubt that if this keeps going down like that, that is just going to keep the pressure on everything else. Okay, so you do want to see this bouncing. In fact, if you really want to cheer yourself, I'd watch the Russell rather than the S&P and the Nasdaq. I mean, this is classic, right? Trend into a trading range. So all you're doing is waiting for this trading range to break out. I think what will happen is next week, if we get that Fed coming in and getting on our side, we'll go away again. And this is probably more relevant to uranium than what the Nasdaq is, just my opinion. But look at that. Maybe that's going to help us out a bit more. So look, I'll just leave it. I don't think there's much to say here. Right? You're just tracking your downtrend until that downtrend breaks. I wish you the best of luck. Thanks for watching. See you next time. Bye.